Hey everyone, good afternoon, good evening, or morning, I guess, depending where you're located. We have to kind of do this really quickly because I ran out of time. So we're just going to set the conditions very, very quickly together. I already kind of went over this. I just was going over the 13-point offsets that we had. So obviously gapping here would make sense. I'm just going to share the Substack. Where is the Substack? Not the Substack chat. Why is it still showing Substack chat? Close that. Do you guys see that? Can you see that? Quickly, guys, because I only have 2 minutes. So I have to type as fast as I can. Okay, report is almost done. I didn't really... I have the conditions ready for the week ahead. But I kind of want to go over it really quickly. So I think considering where we closed, it's pretty obvious that we probably want to open at least off that 256 or 346 point breaks. And that being said, it's going to be back over that 6871, 6878, 6881, that kind of area there. So I think that'll be like the first condition considering where we closed. So considering where we closed in the means, which is an area that can often imply volatility, while 6852, 6857, 6861 aren't necessarily bad, since they were calculated areas for this past week to offset that reduction of 12 to 13 points. Gap opening at core ranges would be ideal. So 6871, 6875, 6878, 6881 range is the best area for us to gap at, as this can increase odds of immediately retracing the zone back over 6888 and retesting 6920s. A mass gap over the zone 6880, 6890 can be in play, but less likely considering closed. Keep this on the table. Okay, opening flat, so opening basically between here, 6854, let's say 6861 area, is what can keep volatility two directional and increase odds of zone backtest. So this is what, basically going back to 6788, 6832 zone, open above 6858, 6861, but beneath 6865 can still imply volatility, as it's beneath core ranges of 6866, 6868, likely a minimum range to immediately try to retrace to fight off volatility if we do happen to open in the means. Okay, let's see. What do you guys think? Quickly, we have 5 seconds. Where do you think they're going to gap this? You guys think they'll open flat, 7-1? Oh, they did a flat open. That's going to keep things kind of sideways in terms of the direction that they want to take this to. So my biggest concern is we have a 4-day that doesn't flip until Let's go back to trading view. Okay, do you guys see that? Or not yet? Sometimes this thing is slow. Can you see that? Okay. So it's not awful if we open in those 68, 50s, and 60s, like I was just saying, but my only concern is I don't really like this setup, and this kind of runs until the 4th. So we have from basically November 30th through, well, I guess like the 1st because of the date, but we have 3 days essentially for this to go back and forth. And I did mention that on the report and gave examples of like the different kind of structures that we could face. So while we could still have odds of retesting this all-time high zone, okay, so like going back to 6888, 6932, it could still keep odds in play too of us coming back to this prior zone in here. Does that make sense? So, and we can cover this real quick just so you guys can see. Let me just delete these. And this is on the report, but it's just so that you guys have an idea. Okay, so if they do like open us flat, you see how I said around 5.4? 5.4 is still considered flat because it's still above 5.2, but beneath 6.1. Anywhere in the means is essentially flat. So if they're not taking out 6.4 immediately, you see how they just stalled 6.3? 6.4, 6.5 stalls immediately can imply that volatility. Overnight conditions based on this kind of open, we definitely have to immediately try retracting out of the mean. So taking out this 6.3, 6.4, 6.5, these are all mean areas, okay? Hence they stalled there on Friday. I think Friday they stalled exactly 6.3, 7.5, 6.4. And at least try tagging some core ranges. Even if they come back and backtest lower, as if they can retrace a little bit higher, it'll help offset that early week volatility. While we have a lot of flips on the 1st and 2nd, the wider range flips are closer to the 4th. So even if they were to take range down early in the week, it's not the worst case scenario, but I would prefer that at the very least they try protecting the zone. So that would be this area in here, like close to like 3.1, 3.2. And probably avoid the channel early. I don't really want to head back into the channel. The channel would be like between 3.3, 3.8, 4.4. And you see how we got stuck there all week last week? Like if they want to take it back to the channel and digest it overnight, it's not the worst case. But if they're going to stall 6.3, 6.4, then at the very least, if they're going to bring it back, let's say to these areas in here, I would prefer that they don't. I would prefer that they test upside first. But if they were to bring it back there, then it's fine because then they could just digest a little bit until they're ready to bring it back. Does that make sense? Because this was the area that implied volatility to begin with, right? When we had that gap above the channel and we never digested that channel, this is what caused all of that volatility in the first place. Okay, because you always have to digest a channel area. You can't just gap there without digesting it first. So this area in the past is basically what implied that volatility to begin with, because we had that gap and then they kind of stalled. So I would prefer that they avoid heading back to the channel just because I feel like, I don't know, what do you guys think? I feel like we've digested it enough in the past 2 weeks, especially like back in here. Maybe we didn't digest it entirely as much because we still kind of were beneath here, but it was mostly the areas between like 3.8. So this should be a bit lower. It was mostly the areas like in between like 3.3, 3.8, and 4.4 and 4.8 that they didn't really digest. So I didn't really care too much about the 5.8 or 4.8, 4.9 areas as much as I did here. So I think that that was enough digestive like action in the channel. So I don't really think it's favorable to head back there currently. I feel like they have to at least try breaking that 6-4 area first out of the means in order for them to have maybe some better odds of extending. So hold on, let's... Okay. So let's put... And I don't know if this is going to help you guys, but... So basically, if they can maybe avoid heading back to the channel and at least try retesting this area first, just to at least give some higher odds of reclaiming some core areas early in the week versus having to wait until later in the week. So I'll post this in here, because then otherwise we could maybe see like 1 to 2 days of backtest and digestive price action, which isn't the worst case, but that's more likely to form like those star-like reversals on those 4 days, because we're trying to see what kind of action could net what, right? Because on the 4-day, if this runs until the 4th, that means the 3rd would be the final day. You can either make a big star-like pattern here and extend, okay? You could have 2 directional action, which is what I'm thinking would happen if they opened in this area here, so where you could test both sides of the trade. Okay, or like the worst case would be to just make a star like this and then have a reversal come back down like this. And I did include these in the report just so you guys can see, but do you get what I'm saying? So kind of something like this, if they were to come back later and reverse this. So you have to kind of think about... You have to think about timing aspects of this and how you'd want this to close. So it's not the worst case if they backtest downside early in the week, but if they retrace but not high enough, that's what could form the star. So just because you go down early in the week but then come back up doesn't necessarily make it bullish. Does that make sense? And just because you go up early in the week and then come back down doesn't necessarily make it bearish, because technically speaking, if they brought this up, okay, and then brought it back down, but brought it back maybe to like 3/4 of this bar right here, let's say, like maybe like in between here, and just made like a nice, let's say, flag formation. Does that make sense? Like basically back to core areas. And I'll delete these so you guys can see this better. If they basically brought this back to, let's say, like a core range, okay, maybe back to like here, even if they were to bring this down, okay, you could still make a nice flag. Does that make sense? I need you guys to start seeing the vision like early in the week so that you can understand what I'm saying. So it's kind of hard with the magnet, but you get what I'm trying to say, kind of like that. Do you guys understand this concept? Whereas if they're going to test upside and retrace, we got to take out that 64 spot pretty quick and at least tag core areas. We don't really have to get into the zone, but at least like tag that 7-1, 7-8, these types of ranges in order to at least increase the odds of not staying stuck sideways or having a bit of like a star-like pattern form here. So these are the 2 ways that I think this could pan out for the week. So if they're going to clear upside early in the week and avoid coming back to the channel, then the condition would be that it better retrace high enough, because you don't want it basically stalling here, okay, and then coming back down, because then your odds of you holding core ranges would be pretty low. So what kind of core ranges would you have to hold? And I feel like this is going to be pretty straightforward. So technically speaking, we could have some support this week down back to like the 67, 70s. Okay, maybe close to like 67, 67, 68, 67, 71, 78, 81. Worst case scenario would be if they retracted all the way back to 67, 44, 38, but I would prefer that they avoid that entirely and kind of keep those downside ranges a bit tighter, just so it doesn't form too much of like a star-like pattern here, because we do have some odds that continue through till the second. And what I mean by that, do you guys see the 5-day? Okay, this is still technically within these ranges here. So, and this doesn't flip till the second. So what would be the final day of this bar right here? And this is how sometimes you can offset. What's the final day of this bar right here? Today is the final day, right? So today, like overnight, tomorrow, whatever. Okay, so the range over the next 24 hours is pretty important, right? Because this is what could help if maybe they keep this alive and break these kind of structures on this range, then we won't be at as much risk on the 4-day, okay? And it makes sense because even on something like this, like usually you want to clear mid-supply, okay? This is like the mid-supply range, which is right in between these areas here where they're kind of stalling. So hence you need to get those breaks of 6-4, 6-5, so on and so forth, okay? That's what's going to help like decrease odds of getting like that kind of star-like reversal, and maybe increase odds of getting that continuation through here. Otherwise, that's how you can come back. Do you see this? Even look at where this is situated. This is like right around 6, 7, 8, 8, which is pretty interesting, right? That would decrease odds of you getting like that reversal back like this. And then obviously your risk starts to increase, because then you could be headed back to the means or the channel. Since we did open in the means, 6, 7, 6, 5, 6, 7, 6, 4 is just going to be an area we're going to know anyway. But are the 6850s still technically core ranges for us? And this is why I said in the report, it's okay if we open there. Might not be like the best for odds in terms of just clear directional price action. Last week, yes, because last week we could afford that. This week, not as much, okay? Because 6650s and 6660s down in this range here, they didn't imply as much volatility as maybe the 6850s, okay? Because this area here now we're getting into a pretty high range of risk. This is also getting really close to hitting like close to that 256 points in range up here. I don't know if you guys can see that, right? Or 346 points in range right here. So once we start breaking these areas, these are pretty big intervals that are broken, not just based off structures and time, but also just based off range. Do you guys see this? Off these open closing prices. So that's how we would also know that these dates, okay, are you guys listening, are linked directly back to these points here. So pay attention when you're looking at structure in terms of time, okay? Because if these are aligned to here, okay, then that could imply that maybe there are some odds that they could break, right? Especially if we're like focusing specifically on the 20th and 21st, where the 20th and 21st, very important dates for us in general, like generally speaking. What is that 4-day? Yes, right? Because this would have flipped on the 21st. Final day of that would have been the 20th, right? These are extended through the 28th, through the 4th. So I know that the 3rd and 4th are still linked to these dates, just as they would have been linked back to these points in time here. Okay, so it is pretty important that when you're tracking these things, that you're understanding the importance of time, right, in correlation to this. So I really like the 7-day structures too. I feel like not many people focus on this, and mainly because this one here is an overlap between that second flip and the 4th flip, because it includes the 2nd as the final date, but it also has the 3rd, which would be the final trading date before the 4th. Does that make sense to you guys? I know it's a little bit confusing, but I feel like this one kind of, it's almost like a good median point between like a 4-day and a 2-day, right? Or like that 5-day sort of pattern. So that's going to be a structure that I'm going to watch this week. And mostly to see, so if this flips on the 3rd, the 2nd would be the final trading date. It's basically already past 75% of that time interval, and there isn't really too much range. And I also really like this time frame because of structure. So I really like how these structures are formed around our price points of like 7.4, 7.8. Do you guys see that? I don't know if you guys can see this, but do you see that? And if we measure off of like our actual lows back in here, right, from here, they should be pretty aligned. Okay, do you see that? This 2.5 low is directly aligned with like these 7.2 ranges. Okay, when you're looking at a 346 point range. So it's not, I'm not just using a 7-day randomly. I really like the structure. I like the time basis on it. I like that it's aligned with the 20th, 21st, and it also has alignment with the overlap in between here for the 2nd and 3rd. So remember how I drew that one diagram of where is it? And I had a feeling that they would open flat. You guys know why? Why did I think that they could probably open this flat? Based on what? Well, probably on this, right? Isn't this a huge area where we could get stuck if the market wanted to? Remember this mock that we drew? So I already knew that once we started approaching close to 6.85765, the market could get conflicted here, okay? Because it's an area of confluence, but it's also an area that could imply two-directional price action, volatility, stalls, delays, okay? So I'm just going to be a bit cautious in this area, especially if we open around 5.4. However, I know that 5.2, 5.4, 5.7, these are still core ranges. So technically speaking, they could still net us the 69.20s retest, correct? And these are the areas that we failed in the first place. I also noticed too that when I went ahead and I looked at like that 13-point reduction I was paying attention to, like it would net back to like basically retesting these areas here. And this area would be pretty much like the top of the zone around 6931. Do you see that? Off this area here. And off, where's the 6909? 6909 area, like that stall that we had back here, right here, for our November 3rd opening monthly candle. Do you see that? Do you guys see how these areas align back to like these 20s? So I just thought that it was maybe important to note that, because I can already see that even these 13-point reductions that they had, and it keeps being the theme, and I think they're doing that intentionally, okay, because off 6.9, 12, 6.9, 13, whatever these ranges are right here, this area in here. Okay, do you see that? Let me delete these so it's easier to see. Okay, there we go. Now I think that's easier to see. Okay. Do you see how these would net back like core ranges around 69.24, 22, 69.31, 32? I think that this is important to kind of note in here at least. Okay, so, and also because of how they're structured around these closing candles and price points in here too. Like, look at these ranges in here. Okay, so it doesn't necessarily mean that you can't get back to retest this week, but I think that there could be a lot of volatility implied. Also, just measuring even off of like today's opening range where they started off the week, off this 5475 area here, I noticed that, because it is important to start noting these things from now, I noticed that this would be like a 44 point break could still get you 6899. Okay, so that's okay. I noticed that the 34 point break could still get you an entry into the zone. Do you guys see what I'm saying? Let me delete this. Hold on. Okay. Do you see how this could still get you a 17 point break could still get you 7-1 test or 7-2 test, which is the same thing as that 346 point break. Everyone's on the same page, because I always work in increments of 17, 22, 34, 44. I want you guys to see how there's confluence here, okay? So 6871, 6872 off open is 17 points. Also 346 points off lows, off 6525 lows, okay? So that's the first area of confluence that we've kind of discovered. Next range in confluence is the 22 points is around that 7778. And if they do break us a 33 to 34 point ratio, it gives us an entry into the zone. Do you see that? Like around 6887, 6888, 6884. So I would think that we at least have an odd of getting into the zone off these areas here at the very, very least. Okay, and obviously I could mark these, and do you guys want these in the report, or? This was another reason why I figured if they open in the 50s and 60s, it's not the worst case scenario, but obviously it just could imply volatility. That's really all it is. It's mostly just the fact that, okay, if they open there, then volatility could be implied. Okay, so just be prepared for like two directional price action if that was the case. And then when I was doing the math, I also realized that if we get a 66 point break, even if they open off these areas here, it's still going to give us an odd of getting to core ranges in our 6920 retest. Oh, wow. That open is exactly 6920.75. That's pretty impressive. So, and this is another reason why it's not that I don't want to go back to the channel. It's just that if they do early, it could decrease the odds of getting the 6920s being retested. Does that make sense? Whereas like if you're holding exactly right here where they're currently holding and you tag core areas early enough, then by core areas I'm talking about like the 6868, 6871, then it can keep those odds in on track for the 6920s as early as this week. And I haven't done above 88 point metrics, but I would imagine that that's probably going to be close to like the channel, like 6938, 6944, and these were really big areas in the past. So at the very, very least, if they don't give odds of retesting all-time highs this week, there could be odds of going to the channel. And I would think that would be if this channel gets protected. Are you guys listening? If this channel gets protected and is avoided, let's say, so this channel down here, that would be probably the only way that they could take it to that channel above, okay, which would be like back to like the all-time high channel area up here. Okay, and that could be the same thing as like an 88 point break off these opening ranges. I'll just include these anyway, but I guess, or even that could also be like the same thing. So if that's aligned with 4-2, That's probably the 13 points beneath, or 12 points beneath. Yeah, it is. That's so funny. Look at this, you guys. Hold on. Okay, because if they did closer to like this 417542, you guys listening? And the 88 point break, let's say they stalled up in here. That's probably the same range off highs, or like pretty freaking close to it. I would bet money that off 417542, it's probably right around that all-time high. Oh wow, so that could mean too that even if they were to break highs, they might only maybe break it by like 1 point. Isn't that funny? Okay, let's mark this because I think this is obviously really calculated, but I think it's important that maybe we track this because that could be the offset. Let me just change the colors here because it's kind of hard to see what is what. Hold on. That would be like the offset. This is the offset. This is if they were to hold the channel. Okay. And that would be off like an 88 point break basically. Close to like 417542. And then let's just do our final increments here of well, I don't know actually, because if they open in those kind of ranges, remember how we say core could sometimes be like 107 points, right? Like, technically speaking, if they brought it to the upper means, which is bringing it basically to these areas here, that would be a 107 point break. Let's not keep it off the table, I guess. We'll just put them in here, maybe even if it's not for this week, at least so that we have them. Because that would kind of make more sense. And like these areas are obviously going to be closer to like the 115 point metrics, right? But I would imagine that like the 60s are closer to like that 109, 107, 110. Does that make sense? And don't forget that the theories guide, like if you struggle with this, go back and reference this here. Like usually if you get core ranges like that, you normally hit closer to like these types of points, okay? So that would make sense because if they did something like that, then you'd be hitting closer to like 6958, 6961, 6964. That would be off of those ratios there, okay? Like 103, 107, 110, 115 points. I think the 103 is probably like this area here is probably the closest to like those all-time high, just like slight breaks. It wouldn't even be like mass breaks. It'd be like slight breaks, which is the same thing as like 103 points from this open or 100 points from Friday's close. Okay, so I don't know if you guys want these in there, but these could end up being really calculated spots if they did break highs, I guess. And does stalling the means imply volatility? So this would be like, okay, they break highs, but they break it to the means, not the 70s or 80s. And I feel like that should help you understand how this could play out. Whereas like if they did like a full 128 point break off these, I would bet anything that would take you to the zone. Look at that, 132 point break, you guys, or 133 point break takes you to 6988 basically. Isn't that crazy? So that's what could basically get you a break into a zone area here, which I highly doubt they would do this week based on that, but I guess it's what could keep those odds alive of getting to a new zone. If so, then 128 points is probably closer to like 8284. Okay, I don't know, 6980s off of here. Okay, I'll put them in this week's report, but just keep in mind that odds are not as high, okay, for these kinds of ranges to trigger this week because of basically the structures that we're working with, okay? So, and I feel like in order for that to be the case, you have to avoid the channel. You have to retract 68, 70s, and 80s immediately, okay? You must retest 69, 20s as early as the 3rd, or no later probably than the 3rd. Everyone's on the same page? To even have any sort of probability of getting like a all-time high retest as early as like Thursday, Friday, or some breaks. I highly doubt that they would do this week, but if they did break these ranges and these intervals, this is what they could extend to, and this is maybe all the way through to like that December 16th through 17th, or these could even be like the pricing points, guys, of the rollover, okay? That would also make sense too, because we have the rollover on the 16th. So we'll keep these on like in mind anyway, and obviously the same thing could apply to downside from these ranges. Like you see how it would be linked back to 6726, this area here. And I did put this in the report because this 726 area is also the 366, 356 point hold off these August ranges. So the 6720s are very important that we sustain now to basically avoid coming back and retesting these lows. Does that make sense, you guys? Like on a wider term basis, like 6720s, that's probably going to be my max downside for the week if they some way somehow did break this all the way back down. I don't really want to get any lower than the 6720s. If they could avoid that entirely, that would be even better. Like I think above 6.5 would be the best case scenario, but I'm just being prepared for that in case there is volatility, that we'd probably want to avoid that. And maybe we'll mark this in here just so you guys are aware of like the risk beneath. And then I haven't even looked at it, but I would bet like 150 points is probably close to, that's probably going to be close to 7,000. 7,004. Okay, and then 173 is probably core. Yes, it is. Do you see that? It's like the 70-20s. So these areas could still get you there, essentially. Okay. That would also be a 354 to 356 point break here off the 6670s. Or you could think of this area as like a 346 point break that we talked about. So I'm just going to quickly just glance at this because I just want to see. So 22 points beneath is the bottom of the channel. Okay. So that would make sense that 3.8 is probably 17 points, right? Okay. I think that's pretty straightforward though, guys. Like you probably, so 3.8 is around 17 points. And if they break to 7.1, so remember how I said 68.38 was a huge support? That's where the volatility risk started in the first place. That makes total sense because if that's where the volatility started in the first place, 68.38 is basically aligned with 68.71. Okay, those are 17 point ratios from this open. So if we don't retract 7.1, then we have an odd of testing 3.8. Does that make sense? If you test 3.8, then you're at a risk of basically retracting. You're basically at a risk of retracting back to the bottom of the channel. 22 point ratio is exactly 6833. Okay. I don't know if you guys need every single one of these pictures, but I feel like that just makes a lot of sense. And so we can just put these as some of these conditions. So this area in here, 3.3. Let me just delete this. Or maybe we can just put them all together. So like 3.8, 3.3. I'd imagine that these, oops, these are probably the 33 to 34 point ratios. Yeah, of course they are. So 6820s would be the 33 to 34 point ratios. Okay. So we'd know if we fail that, then obviously that's going to decrease our odds. And that 34 point ratio is the same thing as getting into the zone. Okay. So, and if you fail 6822, then it's common sense that you can backtest the bottom of the zone. There's so much alignment here. Does this make sense to you guys? I feel like this is pretty straightforward. Like 668 or 6888 is basically 34 points from this open. Okay. 682221 is core, which is 34 points from this open. So basically, if you can't get into that new zone, you can backtest core. If you fail core, you can backtest the bottom of the zone. And I would bet money that the bottom of the zone here is probably getting retraced back to 6787, 6788. Yeah, it is. Do you see that? So if you fail like a 34 point retracement, okay, yes, there's odds around 44 points. That's neutral. That would make sense, like 6808 if they came back to like mid ranges here. That doesn't really give us any confluence though. Whereas if you had a full 66 point, 68 point reversal, you could get back to basically, let's see, 475. Where's 66 points from here? This should be the bottom of the zone. Yeah, it is. Isn't that insane? So those structures I drew, they make a lot of sense because that is exactly how this would play out if that was the case. Okay, it would be like this, basically. And on the inverse, it would be the 6920s. Yep, that's so cool. You guys have to admit that that's insane. Isn't that crazy? How aligned that is? So basically, even if you went back to these areas here, you could still technically have an odd of getting back there. So I'm just going to leave that as like the ranges for the week. I wouldn't really want us coming too much lower than that. Like I know we said that we have room down. Okay, I would imagine that the 88 point ratio is probably going to be around our 6766. Yeah, it is. Okay, I want to protect that area this week, the 6766. And I think it would be pretty, so this is probably the 6942 area that we talked about, right? So basically 6766 in this area here are kind of aligned with this range down here at like 6566, which we talked about. And then the max range scenarios, which worst case scenario, if they took this down 100, remember how I was saying like the 107 110 point ratios, that's basically this channel. So 6748, 6747, 46, 44, which is a really big spot for us. Do you guys want this in there or no? Like, I think it's good that we probably see both sides of the trade. Because we looked at the 107 above, but we need to like make sure that our 107 and 110 beneath align with our spots, and they do. That 6744, 6748 areas are huge. So let me just mark these since we already talked about both sides anyway. Okay. I think it's good that maybe I can delete some of those other pictures then. I think it's good that we at least know what these areas are. Yeah, exactly, right? It's good to see both. So then what did we say the max range would be? I don't really see like 173 point ranges this week, but I would say that the max range is probably back to those 6720s, and that would make sense. 132 point ratios is our 6722. Okay, 128 point ratios is probably back to our 6726, and 6726 7.5 is right around these closing price points here. Okay, do you see that? So yeah, that would make sense that we'd want the 67.20s to for sure hold, okay? In general, even if it's not in reference to this week, this could probably be recycled for next week too, okay? Because these are also the same as entering this new zone up here, 6988, okay? Or upper core areas. So this area here, even if, let's say, you had some crazy reversal all the way back down to here, you could technically come back here and still go here. Does that make sense? You could still back test here and still head back up here. So, okay, let's keep this in here so that you guys have it. I don't really see us going, I really wouldn't want us going below 67.20s though, just because that area is aligned with August 1st, okay? So if it wasn't aligned with August 1st, I wouldn't really care as much, but because it is, and it's aligned with these structural highs right here, I don't really want us coming back beneath that area. Does that make sense? Because that would be above these highs. Do you see that? This area is 346 points above that August 1st highs, okay? So if you sustain the highs, you should sustain those lows. Does that make sense? Like, you don't really want to come beneath that. It's not that you can't afford to. Technically you could, but then that volatility would stay present. So I think this is good to just keep for the month of December in general, just so we have these ranges. And so I don't have to cover them again. So in general, I think 67.20s now are going to be a big spot for us, because then otherwise your 150 point ranges come back into play. Your 173 point ranges come back into play, and that would start filling all these structures. And then this is where you could basically see 256 point reversals, which is probably these lows in here. Do you see this? And if you get that full 346 point break, then you're basically taking out that low range in here and breaking back down to these structures. So failing 67.20 is huge. Okay, we don't want to fail the 67.20s, at least not anytime soon, if we want to keep these odds in play. So, okay, I think those are our ranges for the week. We'll see how this ends up playing out. Considering it's going to be probably a two-directional week, we're going to have to be very cautious with how and like which way we trade things. Overnight conditions, I think, can still stay the same. We're going to obviously watch to see if we can hold off 6838, 6842 for now. That'll be an important range. And then from there, we can look to see if we can test above 64, 65 as early as today, probably no later than, so that you see how they tried testing here and then stalled. So 6.4 is still the mean, so they're for sure going to take this back to the channel, which again, it's not the worst case, but you have to kind of think about, if they take this down, they need to at least try sustaining and retracing high enough by the second or third. So we'll see if we can sustain the channel overnight. And if we sustain the channel and we avoid this core area, like 68.20s, then we probably have an odd of breaking 6866, 6868. All right. Okay, I'm going to end the stream, guys, and then finish the report. And I'll have that out probably in the next like 5-10 minutes. I just wanted to do the stream just so that everyone at least understands that opening flat in here, it's not the worst case if they open around 6.8, 5.4, 5.8, 6.1. It's just, you have to now understand that this could be an area of confliction. But this is a pretty big spot for the market in general, and for us to get to 7K by end of the year, okay? So this is the area that's going to basically determine if they want to do that or not. All right, I will see you guys probably later tonight. I'm just going to post this and then put out some overnight updates probably in like the next like 6 hours or something like that.